So in this video, we're going to be covering 5 top stocks, all of which are currently trading at under $100 a share, and all of which have a huge potential for massive upsides, which means that if all goes well, we could make a whole lot of money from investing in these stocks, and you could have a really good return on your investment. Now, I've put a tremendous amount of hours researching each and every one of these stocks. So I have a lot of confidence in them. So make sure to watch this video all the way until the end so you can get my full analysis and reasoning for each and every single one of these companies. By the way, I spent a lot of time making these videos for you guys. So if you'd be kind enough to give this video a thumbs up, I'd really appreciate it, as it really does help the channel grow. Thank you so much. So let's get started on my 5 top stocks under $100 that you guys should be watching right now. Number 1 on my list is Square, ticker symbol SQ. Now, Square is a rapidly growing technology company, and they've built a massive payment network, thanks in large part to their payment reader, which I'm sure you guys have seen at one point or another. It's those little white things that you can plug them into your smartphone, and all of a sudden it turns you into a point of sale terminal. Since then, they've released fancier and more robust devices, but the important part that you have to know is that these damn things are everywhere and are widely popular, especially for small to medium-sized businesses. In fact, they are now used by more than 30 million businesses worldwide who use their technology to facilitate credit card payments and track sales. Also, honestly, what excites me the most about this company is their widely popular app, which is called the Cash App, which has grown tremendously from having just 7 million monthly active users at the end of 2017 to now having over 25 million active users. So obviously it's seeing absolutely explosive growth. But even more important to me is the fact that it's innovating in a lot of key areas. So Jack Dorsey, who runs Square, who just so happens to also be one of the founders of Twitter, seems to share the vision that Elon Musk had almost 2 decades ago with PayPal.
If you just basically address all the reasons why people are taking money out of the PayPal system, so you have to provide them with checks so that you have a bridge to the legacy transaction system. You got to provide them with a debit card. PayPal would be where all the money is. It would just suck all the money out of the banks, and the banks would go away.
What Elon is basically trying to say in this clip is that if you make your payment platform so robust and seamless that customers have no real reason to ever take their money off the platform, because they can receive and spend money for pretty much every purpose they could ever want while still keeping the money in the platform, then this kind of technology would disrupt the whole banking industry and render banks in general almost useless. Now, clearly, PayPal didn't agree too much with Elon's vision because they basically ended up kicking him out. But this seems to be the exact vision that Jack now has for Square, especially with their Cash App already enabling users to receive and send money easily, buy and sell stocks and cryptocurrency, all while having no foreign transaction fees. Oh, and let me not forget to mention that Square now also offers loans to its merchants under Square Capital. And since they also process the payments for these companies, they have more accurate information than even banks have when deciding to accept or decline loans, which gives them an almost unfair advantage. Now, as of recording this video, Square is currently trading at $63.71, up significantly from its March low of $38, which is when the market basically collapsed in general because of the current pandemic, but still down quite a lot from its 52-week high of $87.25. So it goes without saying that I'm a huge believer in Square's long-term growth and their vision, and I highly recommend that you consider buying this stock if you're looking for a high growth potential tech company to invest in. Okay, so number 2 on my list is Qualcomm, ticker symbol QCOM. Now, Qualcomm has a very unique business model, and it's a chip making powerhouse, and it's currently the number 1 vendor of mobile application processors, which in simpler terms means that they sell a whole lot of chipsets for mobile devices and tablets to companies like Apple, Samsung, Nokia, and Motorola. So basically, their chips can be found in a whole lot of smartphones. Now, on top of charging these companies an upfront charge for the chips, they also charge a royalty to these companies for every device they sell that incorporates their technology. So Qualcomm literally makes money from its royalty deals every single time someone buys a mobile phone that utilizes their chipsets. Wow, now that's a beautiful business model if you ask me. But personally, what excites me the most about this company and their stock is that they are a market leader in 5G technology and are set up to benefit tremendously from it. Think about this, the move from 3G to 4G allowed Uber, Snapchat, and online banking itself to emerge and change the culture completely. So now imagine what 5G will do for us. It's going to absolutely revolutionize the world as we know it. 5G is said to be up to 100 times faster than 4G, which is insane. And that's going to facilitate a whole new wave of technological advancements and innovations. Think along the lines of artificial intelligence, autonomous vehicles, virtual reality, and so much more. The race for 5G is on, and all major mobile carriers are expected to be releasing some version of 5G later this year, and some of which are already available right now. So with all this in mind, it would probably be a good idea for us to invest in 5G since it's without a doubt the future, and Qualcomm just so happens to be one of the biggest chip makers who also has an incredibly impressive portfolio of intellectual property, i.e. patents related to 5G technology. So let's get into the numbers. Qualcomm is currently trading at around $75.68, down significantly from its 52-week high of $96, and pays a dividend of about 3.4%. And on top of that, it has a PE ratio of only 22.46, which is extremely reasonable in my opinion for this company. So if you believe in 5G is the future, then you should definitely consider buying some shares of Qualcomm. Okay, so number 3 on my list is Match Group, ticker symbol MTCH, which owns and operates several of the world's biggest and most popular online dating apps and websites, including OkCupid, Plenty of Fish, the infamous Tinder, Hinge, and Match.com. Now, even before this whole pandemic occurred, the massive shift to online dating has been going on for several years now. In fact, in 2017, a study done by Stanford University found that almost 40% of couples met for the first time online instead of in person, which means that instead of meeting our partners in school or work or through friends and family, now more than ever before, we are more likely to meet them online. And if this number was at 40 to 50% before the pandemic, imagine now that most bars, clubs, restaurants, and schools, and just businesses in general, are all closed. So that percentage of single people looking for partners online is probably closer to 70% now, if not more. Also, with all the uncertainty going on in the world right now, nobody really knows for sure what's going to happen to the economy over the next year or two. But one thing I can tell you for sure is that dating and relationships is a well-known recession-proof business, since people will always be on the search for love and other things. And where do you think that most singles are talking, especially now that most of the world is stuck at home and bored? Apps like Tinder. Now, men lie, women lie, but numbers don't lie. And in 2019, Tinder was not only the #1 downloaded app worldwide, but it was also the top grossing non-game mobile app in the whole world. Now imagine how many massive apps there are out there, and for Tinder to be #1, that is staggering and should paint a very clear picture of just how dominant they are, but also just how lucrative the dating sector can be. And Match Group is absolutely dominating it, with products in over 40 languages to users all over the world, and over 9.8 million paying subscribers, along with revenues of $2.1 billion in 2019. It is clear that they are a powerhouse to be reckoned with. Now, as of making this video, Match is currently trading at about $78, which is significantly discounted from its 52-week high of about $95. So in conclusion, I see Match absolutely dominating this high growth niche for the foreseeable future, especially considering that even well-funded challengers such as Facebook themselves have failed to disrupt its business. So Match is definitely a high growth stock with a ton of upside that you should consider adding to your portfolio and holding for the long term. So next on my list and coming in at number 4 is Delta Airlines, ticker symbol DAL. Now, as you know, with the current health situation, airline stocks have been absolutely hammered over the past couple of months. And rightfully so, because literally nobody is traveling right now. So they are without a doubt going to lose a lot of money this year. Now, Delta is currently trading at about $22, down over 60% from its 52-week high of $63. And it definitely didn't help the stock that the GOAT himself, Warren Buffett, announced just this week that his company, Berkshire Hathaway, had unloaded all of its shares in airline stocks, including Delta, because he believes that airline travel will basically never be the same again. And he has lost a tremendous amount of confidence in the business model long term. Or in his exact words, the airline business, and I may be wrong and I hope I'm wrong, changed in a major way. Now, Warren Buffett is without a doubt one of the greatest businessmen and legendary investors that the world has ever seen. But he is still human and he does make mistakes from time to time. In fact, he refused to buy Amazon shares for many years because he was a famously tech stock averse investor. But later on even admitted that he was quote unquote an idiot for not buying into Amazon earlier, and it was pure stupidity on his part. Now, I don't want to brag or anything, but I did in fact start buying Amazon shares around 2013. So I don't know if that makes me the GOAT or not, but I'm just saying, nah, I'm just kidding. I'm definitely not the GOAT. I ain't shit yet. Warren Buffett is forever the GOAT, but with this particular stock, I disagree with him because I have a much more optimistic outlook on air travel in the future in general. And I think once more and more states begin to reopen and people go back to going out and traveling, I think without a doubt things are going to return back to normal. Eventually, especially once a vaccine gets approved and it's shown to work. Now, whether that takes a few months or even a year or more is still to be determined, and yes, in the meantime, Delta is going to get slammed. And this showed in their Q1 earnings, in which their revenue fell 18% to $8.6 billion, and this resulted in a $534 million loss, which was their first quarterly loss in over 5 years. And with Q2 earnings likely to be significantly lower than Q1, buying this stock in the short term is most definitely risky. But I see it as a high risk, high reward type of stock. And to be honest with you, I don't even consider it that high risk personally, especially if you're investing for the long term, and I'm talking 3 to 5 years, because I see Delta as being a company that the government will simply not allow to fail, because it would have such a massive negative impact on the country, not only due to the massive job losses, but because it would impact literally hundreds of thousands of other businesses in a variety of industries who depend on a large amount of travel and tourism. And Delta did already receive $5.4 billion in emergency funding through the CARES Act. So in my opinion, if you don't mind holding onto the stock for at least several years, because it will definitely take a long time to recover, but I don't see any reason why it would not be able to return to its current 52-week high of about $63, which that alone is a very nice 3x return on your money. Of course, this is still probably one of my riskier picks out of the 5, but I feel very confident in it, and if you are a long-term believer in air travel, then I think you should definitely consider this stock. Okay, and last on my list coming in at number 5 is Exxon Mobil, ticker symbol XOM, which is a massive multinational oil and gas corporation that I'm sure most of you are very familiar with already. Now, with crude oil absolutely plummeting to negative numbers for the first time in history just a few weeks back, it's no surprise that Exxon has been hit hard the past couple of months during the shutdown, and currently sitting at a share price of about $44, down over 40% from its 52-week high of $77.92. Now, the reason crude oil hit negative numbers is largely due to the shortage of anywhere to physically store the oil barrels in the US. And oil speculators didn't want to take the actual physical delivery of oil because it's becoming near impossible and extremely expensive just to store the oil, with some oil tankers charging as much as $100,000 a day. So they were basically forced to pay people just to take these oil contracts off their hands. So Exxon Mobil, for me, is a play on oil because I don't believe these prices are sustainable long term. And again, once travel bans start getting lifted, and especially once a vaccine is released and people feel confident to start traveling again, I see oil prices having a resurgence in a massive way. And generally speaking, as oil prices come back up, there is usually a correlation between oil prices and stocks like Exxon Mobil. Now, of course, this is not always going to be the case, but generally speaking, this trend holds true. So if you have an optimistic perspective on things returning back to normal in the near future, like me, then Exxon is a good stock to consider, and not to mention that they pay a whopping dividend of 7.75%, which they have announced that they will be maintaining at least for now. So that definitely helps offset some of the short-term risk, and it just adds to your overall profits that you can get from investing in this stock on top of the potential appreciation that the stock is going to get going forward, especially if you plan to hold this long term. Okay guys, so those are my top 5 picks for stocks, all of which are under $100 and have a tremendous amount of upside with the potential to earn you a huge return on investment. But like always, please make sure to do your own due diligence before actually buying a stock. You should always do your own research so you can fully understand what you're investing in. These are just my opinions, and at the end of the day, I'm just some guy on the internet, and even though I have done very well for myself in the stock market, my risk tolerance may be very different from yours. So always make an educated decision based on all the information you gather, plus your risk tolerance, financial circumstances, and your personal objectives. Also, if you haven't already done so, make sure to sign up for WeBull and claim your 2 free stocks up to $1,400. All you have to do is sign up for an account using the link in the description below, deposit $100, and you will get 2 free stocks. I personally use the platform. It's extremely easy to use, and it's 100% completely free. So I really hope that this video helped you guys out. Make sure to leave a like and also subscribe to my channel if you want to see more videos like this, and share this video with a friend who also likes high growth potential stocks because they might find one of these companies very enticing. Okay, so that's it for today guys. Thank you so much for watching, and I'll see you in the next video. Peace.